Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. This continues to unravel. All of this is adding up and coming to a head. The first thing I want to look at is the next level. What's happening right now? And I will show you why we are about to get to the next stage. The second thing is China coming through. What is China doing right now and what are they about to do? That's important. I'll cover it. And the third thing is the investment aspects. If you look at what's going on right now in the financial system, it's getting wacky. We're going to talk about margin calls and so much more. Let's begin. Here we see Zelensky. Here in this interview that he had with ABC News, he basically outlines the fact that they are willing to discuss the area of Crimea as well as the eastern part. Now, this is disputed territory and essentially saying that we will talk about this. I'm willing to talk about it. Ukraine is willing to talk about it. Russia can come to the table and let's make this happen. So I'm assuming that the discussion would be about, will this be considered Ukrainian territory or will it be Russian territory? What's going to come of that? We will see. Okay. There's so much more going on in the country of Ukraine right now, but I would like to see essentially just a cooling off, some discussions, some handshakes, some agreements. If that does happen, even just a smallest little bit, it's progress. It's progress in the right direction. You could see what's happening with oil prices right now. It's astronomical. I mean, my goodness, $126 a barrel at the time of this recording. By the time you're seeing it, who knows? Could be even higher. Taking a look at this. This is important. There's two parts to this. Russia suspends foreign currency sales as sovereign default imminent. The first part, suspending foreign currency sales. This is, in effect, a form of capital controls. They need to stabilize their currency. They need to stabilize their financial system. That's what they're doing. The second part of that is the sovereign default. Now, this isn't the first time that they've defaulted, if this is the case. This happened approximately 2 decades ago. Many countries, in fact, have defaulted. This is not the first time we've ever seen something like this go on. But what do we have? We have financial establishments. We have, the auditing companies. We've got major conglomerates. We've got the McDonald's. Basically, everybody's fleeing Russia right now. And at the same time, this really puts a lot of pressure on the country, the currency as well. The ruble continues to fall, and you see what's happening with additional sanctions, additional movements to get the economy basically to, be reduced in its output. That's what they're trying to achieve anyway. We'll see what happens. They're sitting on a lot of oil. They're sitting on a lot of natural gas, coal, and so on. And that is supposed to be exported to these other countries. But you see what the United States has done, banning oil imports, and as well as coal and natural gas. And I believe the UK is going to follow. Now, that's just two countries, but we'll see what happens if they continue on. I think it's really, really important. Okay. Looking at all of this, you see the actions that they're taking in response to what's being done. I'm really hoping that we see positivity on the discussions. That's all I'm going to say. Russia proposes nationalizing foreign-owned factories that shut operations. You shut down your factory, we're going to take it over. So I don't know what's going to come of this, but we've seen this happen in the past. A senior member of Russia's ruling party has proposed nationalizing foreign-owned factories that shut down operations in the country. Several foreign companies, including Ford and Nike, have announced temporary shutdowns of stores and factories in Russia in order to put pressure. All right. They want the supply chain to come to a halt. I'm not sure it's obviously have limited control over that, but they're doing what they can. Essentially, that's what they're trying to suggest. Okay, they just get into it saying, United Russia proposes nationalizing production plants of the companies that announced their exit and the closure of production in Russia during the special operation in Ukraine. This is an extreme measure, but we will not tolerate being stabbed in the back, and we will protect our people. This is not a real war. This is a real, this is a real war, not against Russia as a whole, but against our citizens. We will take tough, retaliatory measures, acting in accordance with the laws of war. Big news right now. I hope everyone's already aware of that. If not, now you know. Oil shock, and this is where it gets huge. Oil shock hits plastics in first sign of demand destruction. Demand destruction is not being discussed enough anyway. What does this mean? Essentially, we've got inflation going crazy. You're seeing the oil prices. You're looking at nickel and wheat and basically everything going what direction? Up. All right. Now, how do you get it to come down? What about demand destruction, also known as a recession, also known as, essentially less demand. Hey, how else do you say it? If there is less products needed, less services needed, less equipment, less manufacturing, less, that brings the demand down. And of course, this could bring the prices along with it. But that means dealing with some hard times for a while. Asian plants are slashing run rates as feedstock costs rise. Around 15% of Asian naphtha imports, and basically that's like a liquid that's used in the formation of plastics and other products. Imports from Russia and nearby. So you're looking at this, what happens? If the prices of oil are too high, well, of course, they're not going to be able to deal with this. And this has a ripple effect. Right here, petrochemicals used as the building blocks for everything from children's toys to car interiors have cut processing rates to as low as 80%. When things get too expensive, they simply wait around. It was just like what was going on with the shipping industry saying the transportation of this is too expensive, so we're going to slow down. I mean, that's never a good thing in a sense, but anyway, you're just looking at this. I mean, the premium, it just gives you an idea of what's happening. There's a lot to it. I just think that for most people, we have to be aware of the ripple effect. This is just that one example, okay? Returns from turning naphtha to propylene, looking at, the raw materials into, let's say, a plastic. Maybe it's a toy. Maybe it's a little trinket. Maybe it's something, I don't know, whatever it is. The raw material, what it takes to get that out of the ground, what it takes to refine it, and what it takes to actually manufacture that into the end product. There's a lot of steps involved. And right now, everything is so expensive. The transportation, the manufacturing process, the raw chemicals, and everything. That's never a good sign. All right. Let's take a trip around the table to talk about China. China warns U.S. over forming Pacific NATO backing Taiwan. This, in my opinion, is perhaps even more important than what we're seeing with Russia today. Now, it's not at the forefront, but I think they are sort of injecting themselves into this whole ordeal. What's happening with China? They have to get off of the reliance of the US dollar. If they do so, look out. Look out, not just because of Taiwan, but that is part of it. They want domination. They've made that very clear. They're doing business deals with other countries. And some argue that what they're doing with Africa, for instance, is not exactly positive for Africa, but that's debatable. We can have that argument. Looking at this, though, you know what they're doing. They're going everywhere. Everywhere that they can, they are. And they're buying up land and infrastructure, different businesses. They're taking over Hollywood. Every single example here. China has vowed to continue normal trade relations with Russia despite a massive corporate exodus from European and American firms. You know the examples. I talked about a few of those here today. So you know that they are, in fact, having rock solid relations. That's right. They discuss the potential for buying into Russian companies. All these big companies, big companies. I think China is going to benefit big time. Now, I don't know what kind of pricing they're going to get on something. If maybe they're sort of not doing so well, maybe they can get that at a discount. Russia's rating cut by Fitch, seeing imminent bond default. Again, same situation. This is one company, Fitch, but all the rating agencies basically doing the same thing. Hundreds of ships trapped by Ukraine war, endangering sailors and global trade. The only reason that I mention this here is to simply, just to understand the fact that we are talking about a problem, the shipping industry, logistics, dealing with from 2020 on. It's just been a problem. And now this is compounding that effect. It's not just directly with Ukraine and Russia. It goes another level deeper. Family unvisited, travel a no-go, the hard costs of high gas prices. So here we're just seeing the fact that, yes, I've been seeing your comments all over the place, whether you're from the Netherlands, whether you're from, somewhere in the US, the prices are high in relation to what you're used to. This article here is talking about individuals and their, personal stories essentially, and how they have to forego basic things, pretty basic things, nothing extravagant. It's not like, I used to go to Bora Bora every weekend, but now I can't because my gas is too expensive. No, that's not what it's talking about. This person here wants to go fishing. They love going fishing. They can't because the gas is too expensive. I mean, you just see the different examples, okay? So people should be aware of this. And what can you do? There are many steps that you can take right now today. I've been telling people, I've been screaming for months. If you know that you're going to need something in the next 6 months, if you can buy it now, buy it now. And what has happened? I mean, this is not good, people. What we are seeing right now is just the beginning. It's just the beginning. So what I'm about to show you right here is the Bloomberg Industrial Metals Sub-Index. Essentially just looking at what's happening with metals over the last while. Yes, over the last year, it's been increasing. I've been screaming. I'm not the only one screaming about this, but I'm just trying to make the point that this has been rising. And then, basically overnight, because of what happened with nickel, I mean, it's been a few days anyway, but look at that. From 189 peaking at 239 in literally just a matter of a few days. You can see where it's been over the past 5 years. And clearly a lot of that growth has been, like everything else, since that March to April 2020 timeframe. Metals have done extremely well as other commodities. Here is a big recession indicator. You might be aware of it, but the yield curve flattening, what does this mean? I know a lot of people say, all that jargon, I don't understand that. I try to explain as often as I can. Basically, the longer you're going to buy a bond for, if it's a 30-year bond, that's a big risk over a 30-year period. So you want to be rewarded for that, in relation to, let's say, a 1-year bond. Well, of course. But what happens when you get more for the 1 year than the 30-year? Something's messed up. Well, that kind of thing is happening today. That's all. So when this does happen, when it crosses over the 0 line, which we're getting very close right now at about 23, when that does cross over, that is an indication that we are heading towards recession. It is an extremely, extremely accurate indicator. This right here comes from Goldman Sachs, and that's the risk appetite indicator declining. Why? Because people are worried, they don't know what to do, and so we see that today. Last thing, okay, actually 2 things. Tightening financial conditions sound the alarm for the world economy out of Reuters, essentially saying that there are many different levels to it, but in some ways you look at it, things are actually already tightening. Interest rates have tightened somewhat, but of course, we're not there yet, okay? We're looking at some central banks increasing interest rates, the Federal Reserve in the near future, potentially doing so as well. Investors wiped out as niche leveraged nickel product shuts down. What happened? Well, this was betting that this is a 3x leverage product, betting that the price of nickel is going to fall. What happened? It went up, 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 and away, and that's it. Shut down. Completely worthless at this point. So people should be watching what they do with their leverage. Even if you are not personally buying leverage, but you're buying a leverage product, please be careful. Okay? What can you do today? You can buy the things that you know are going to be more expensive 6 months from now. I'll say it again. That's so important. Whether it's beans and rice and pasta, do what you can today. Okay? That's it. If you appreciate the message, hit that thumbs up button. Don't forget to do that. It's right down there, okay? And are you subscribed yet? Come on. You got to do so. I bring out new content every single day. That's all. See you on the next one. Take care.